In today's video, I want to show you what market orders means in trading. Whether you are trading cryptocurrencies or you are trading forex, whatever you are trading, you are going to encounter market orders, and I want to explain that completely in this video. This is a forex platform, so if you want to take a trade now, I am going to click on the new order, and you will always see it written market execution. There are several other types of orders, but we are talking of market orders today. If I want to enter any position or the lot size that I want to enter, you are going to enter under this volume aspect. So you can enter 10 lots, or you can enter 1 lot, or you can enter 11 lots. Whatever lot size that you want to enter, you are going to enter here. This is telling you the current buying price and the selling price. You are seeing is just a little difference of just these tiny numbers that differentiates them between the buying and the selling price. That's just their difference. So we can see that the current market price is this one. This is the current market price. If I should press on this sell or buy, if I should click on any of them, it is going to take me in at this particular price. It is better explained using the crypto platform. So here we are. For the crypto platform, this is the current market price of this asset, Ethereum versus USDT. And you can see there are other people that want to sell. They are the ones you are seeing them reddish here. And there are those that want to buy. They are the ones you are seeing it greenish over here. The issue now is the person that wants to buy at this current price of 3,532, you are seeing 0.5. He has about 15. You can see it may not be one person. There could be a lot of other people making orders that want to buy at this current price that you are seeing, close to the market price. And then those that want to sell, they want to sell at a higher price as well. And you can see this other part is referring to their quantity. This one too is referring to the quantity that the buyers want to buy. So imagine that you want to buy 1 million worth of Ethereum, 1 million worth of Ethereum at this current price. The person that wants to sell may want to sell at a price higher than yours, and he only has, like, look at this number now, maybe he has only 14, and you want to buy 1 million. It means the person willing to sell for you at your price does not have your quantity. So you may not be able to fill your order all. So the quantity that the available seller has is what the person will sell to you. So if the person has this current one now, 198, as it's changing rapidly. So if the person has this current price as this one, and you want more quantity, the person has a quantity that is like 117, and you want up to 1 million. You cannot be filled. So it's only the available quantity that there is an available seller for that will be filled for you. In order to avoid that, you will want to buy from this person at this price, from another at the higher price, from another with another price higher up, with another price higher up, with another price higher up, until you have your order completely filled, until you have up to 1 million of the Ethereum that you want to buy. But as you are mopping up all of this, they begin to see that there is an available buyer that can buy at any price that you are willing to sell to that buyer. So they begin to increase their prices. And you, since you want enough of the Ethereum, you want it to get to 1 million, that's the quantity you want to buy, you begin to see the prices will be going up, and it will reflect even on your chart. You begin to see price will begin to push up, So if you want to fill your order at once, at any given price you are willing to buy, just to get the number of assets that you are willing to buy from. So like for the example, you need 1 million of this. So you place an order of 1 million. But the issue is you will hardly get someone having 1 million quantity to sell to you at that particular point you want to buy from. So in order for you to get your quantity, you are going to use a market order. So you want to use a market order, which means that once you use this click here and you change it to a market order, and you click either a long to buy or a short to sell, it means they are going to mop up the order of everyone, including somebody that is having 0.1 of the asset, or having 1,000 of the asset, or having 70 of the asset at their given prices. So the market will not fill at a specific price for you. Any available price currently is what they will fill your order with. So you can see if the order of this one has been filled, this is what you see reflecting under the market price. After it's filled up, the next person, it will continue to mop them up for you until you have your complete volume of the assets that you want to buy. That is what is referred to as a market order. You want the volume of assets you want to buy, you want it filled immediately at any given price. So you are going to see that you are filled with different prices. It won't be filled with a single price. You will see that 71 was given to you on this price, 0.5 was given to you at this price, 0.02 was given at this price, until you have the correct volume that you wanted buying. But if you are going to buy a little amount of volume, then let's say you want to buy 0.5 of the Ethereum. This person alone can supply you 0.5, so they can fill you up at this current price. The difference between a market order and a limit order is that for a limit order, if you select limit, whenever you click, you are going to specify the price that you want to buy that with. So if you select that you want to buy at 35430, not 34 now, the current market price of Ethereum is 3533. If you select 3530 as your limit price here, your order will remain like that unless Ethereum falls to 3530 before you will be filled. And if you want 1 million of the Ethereum at that price, and the only available people that are available to supply you at that price are 500 in number with their assets, like the available volume that those that are willing to sell for you at that price is 500, then only 500 out of that your 1 million volume will be filled for you. You may wait for many years or many months or many weeks, because if there is no one with the volume, that order cannot be filled completely. That's the difference between a limit order and a market order. Because for a limit order, it must be filled at that exact price that you are giving. If you select and you input 3530 as the price that you want, Ethereum must get to this price before they will fill you in. Even though you see price is currently at 3530 now, 0.27, If you don't select that with the 0.27, it will not be filled up. But if you say 0.30, then price must fall and reach that 3530.00 before your order will be filled. And if you are going to include that you need up to 10 million worth of Ethereum, 10 million US dollars worth of Ethereum, the order, when it reaches that price, the volume available is only the volume that will be filled for you. But if you use a market order, so it removes the place for filling as your price. You are going to impute how much of the Ethereum do you want to buy, because the price is irrelevant. You will be filled at any given price, and you'll be seeing different prices, because this one may only have 58 to give you, to sell to you. Another one may have only 100, another one may have 0. Another one may have 9, another one may have 31. That's the only one that is available. So you will be filled at different prices. That is how a market order works, and yours will be instant because they are buying from different people. So market orders are also known as instant orders. You will be taken in instantly if the available volume is there to provide for you. This is for crypto. Now the same thing works for the forex market, but because the forex market has more available buyers and sellers, those are referred to as liquidity, it's difficult for you as a retail trader to place any trade, whether it is with market order or with limit order, that you will be filled at different prices. Why? Because over $6 trillion is traded in the forex market. So unless you have something in billions of dollars that you will say anytime you place your order that it will affect the market. But if you are dealing with $100,000, $1 million, that one cannot. Whether you use a market order or a limit order, you will see that you will be filled at the same price. But when you are approaching billions of dollars, that's when you are placing orders that are worth billions of dollars. That's when you see that using market order will fill you up in forex at different prices. I hope with this you have understood what market orders are. So if you have a question regarding the use of the market orders in trading, just let me know in the comment section. Do have a wonderful day. Bye.